Hey everyone, welcome to our Optimum FX weekly analysis. I'll be covering our major currency pairs and commodities such as gold, and looking at what macro data we have been released this week, and mapping out potential trade ideas with the fundamental and technical confirmed. So firstly, let's look at what data we do have being released this week. Okay, so firstly, the US, we do have NY Manufacturing Index. So it's across our major economies. Like, it's going to be very quiet Monday. We do have plenty high impactful data coming out, throughout, middle to the end of the week. So on Tuesday, we do have Fed members speaking, along with housing and building permits data, along with red block index. And on Wednesday, to follow that, we do have weekly crude oil stock, along with mortgage applications. On Thursday, we do have minutes from the monetary policy from the Fed, along with countless jobless claims and Philly manufacturing survey. Okay, so the jobless claims, that's going to be very, very impactful to our US dollar and to our US equities. Okay, and we've got to realize that this data is positive. Hell, like, if it is better than expected, we can see a lot more appreciation in our US equities and depreciation in our US dollar. And if that were to happen, I can see a temporary spike up with the US dollar, because we've got to realize that US dollar acts as a safe haven and doesn't appreciate in times of optimism. Okay, that's what risk currencies are for. So on to end the week, we do have PMI data along with existing home sales, and of course Baker Hughes US oil recount. All right, so let's go into Europe. So Europe, we do have employment change and GDP numbers and trade balance. So that's going to be very, very impactful. So it's going to be very impactful for our Euro pairs. So expect a lot more volume and volatility throughout the Euro session. We do have Fed members speaking prior to CPI data being released. On the following day, we do have ECB member Lane speaking. Following that, we do have construction output and current account data. And to end the week, we do have PMI data along with consumer confidence. Okay, so on Monday, we do have HPI data coming out on Tuesday to start Tuesday before jobless claims or claim account change data is released. We do have three central bank members speaking. Okay, are they going to push price down, push the pound to a better demand zone? I don't know. It's always a possibility. But yeah, we're going to be very cautious of this data being released, and understanding if it is positive, if it is negative, and how we can capitalize on potential trade ideas with the technical confirms. Okay, so on Wednesday we do have CPI data coming out along with producer price index, and we do have retail price index as well. So that's going to be very impactful on the pound. So yeah, I'm expecting a lot more volatility and volume throughout the London session. On Thursday, we do have central bank members speaking. And on Friday, to end the week, we do have consumer confidence and retail sales data along with PMI. All right, so on Monday to start the week with Japan, we do have PPI data coming out. On Tuesday, we do have GDP. We do have annual GDP coming out. We do have annual GDP coming out with all of our economies. So that is going to be very impactful, to get annual numbers. Okay, so next we do have annual industrial production along with capacity utilization. On Thursday, we do have merchandise trade balance, and annual import and export data being released. And to end the week, we do have CPI data being released, which is annual. So let's move on to Canada. So Canada, we do have annual housing starts. No data to be released on Tuesday. However, on Wednesday we do have CPI data being released. Annual CPI data being released. And on Thursday we do have ADP employment change along with annual housing price index. On Friday we do have retail sales data being released. So with the Australian economy, we do have the meeting minutes from the monetary policy at the start of this month. On Wednesday, we do have consumer confidence and WPI data being released, and on Thursday we do have employment data being released, which is going to be very impactful with our Australian dollar. And on Friday, we do have PMI and retail sales data being released. So we understand what data is going to be released this week. Now we understand fundamentally what could happen, how impactful this data is, and now we can map out potential trade ideas because we understand the fundamentals, like we understand what can be released. So now we need to line up these fundamentals with our technicals, okay? So I sound very sick at the moment, so just ignore that. So all right, so firstly we're going to go on the Australian dollar against the US, okay? As we can see, the Australian dollar has been very indecisive in this range at 78, with the high at 78.100 and the lows at about 76.980. So yeah, so that's about 120 pips, I believe. Yeah, about like 120 pips or so. So yeah, we just been stuck in this like high time frame range. We did break below, but we didn't break in retest below. There wasn't any counterbody closures to come below here. As we can see, it quickly got bought up, and there was a lot more buy side liquidity here, okay, with these lows, okay. So with that being said, we did actually push to the upside. I believe this was like late last week. We started to push to the upside, and then this week, so to start with, before we did have CPI data that appreciated the US dollar, we did push up, but we did fail to break above these highs here. And honestly, with this being said, this shows a lot of opportunity. Like I can see a couple of areas where it's going to be a high risk buy or safer buys, okay? So with continued optimism in the Australian economy, and there's no fear or uncertainty across our major economies to somewhat impact the Australian dollar to depreciate. Of course, there's a bit of trade war and tension between Australia and China at the moment, but I don't think that's enough to devalue the Australian currency to fail and break below this zone here. If we do break and retest below this zone here, I can see continued selling pressure down. But as we can see, there's been multiple times where we haven't broken and retested below here. It's just always been bought up here, okay? This is a quickly spike up, but it's just come back down into this range. So what am I looking for potential trade ideas, okay? Your best entry, if you're a high risk buy, is if we come back below to 77 flat, okay? If we come back to 77 flat, that would be a high risk buy. Your safer buys is at 78 flat. 78 flat. If we get a nice break and retest on the higher time frame, so I'm looking at the 4 hour. If we get a nice break and retest on the 4 hour time frame, I can see continued buying pressure along with Dixie weakness, and in order for that to happen, I would want to see a break and retest upon this level here at 89.800, but we'll move on to that soon. And so that'll be a high risk buy here. So I wouldn't be surprised we generate some consolidation, generate a bit of liquidity, mess around this range here, or we could just be quickly bought up. And then if we break and retest here, I can see continued buying pressure up. Your safer buys are if we if we break and retest above this zone here, you know, because you got to understand, like, this is a very, you know, these are our higher time frame key levels here, right? Which, because we're currently trading in this range here, which was shown, you know, earlier this year, you know, in early March. So I'm looking for continued buying pressure with the Australian dollar, and then if we do get positive employment data, along with CPI data, consumer confidence, we can see a lot more appreciation in the Australian dollar. As long as we don't see any, if we do see negative reports of the US dollar, that's going to depreciate the dollar, the US dollar. Oh no, sorry. If we do see negative reports, that's going to be positive for the US dollar, okay? Because the US dollar acts as a safe haven. So that being said, yeah, because with that being said, if we do see positive data in the US, I can see continued buying pressure, and I can see this panning out. Why? Because we've got the technical and we've got the fundamental confirms. Only looking for sales if we break and retest below here, right? But I'm not too comfortable because each time it's come below, it's quickly been bought up, you know? You just look at these wicks, right? These wicks, because at the end of the day, wicks, they show you exhaustion. Candle body, that is showing you where all the buying or selling pressure is, or where all the volume is. So that's what I'm looking for the Australian dollar. All right, let's go to the euro dollar, okay? So as you can see, just let me zoom out a bit. After getting out of this high time frame bearish crypto structure, euro has been rallying to the highs with a lot more optimism in the European economy. You know, with vaccines being rolled out and with less restrictions, so with a lot more restrictions being lifted, we can see euro appreciating. We were respecting this higher time frame trend line. Unfortunately, we did break below it, and now we actually retested it, and failed to get above our trend line. Okay, so as we can see, I've just drawn up a new trend line here with this bullish high time frame structure. So what I'm looking at here, when I'm looking at the zones, okay, so what I'm looking at is continued buying pressure with the euro against the dollar, okay? So with that being said, the continued optimism in the European economy, and if we do see positive data, you know, positive GDP numbers, positive trade balance numbers, right, I can see, and employment numbers, I can see a lot more appreciation in the euro dollar, okay? As we can see here, you know, come midweek, we were generating this little consolidation zone, this little order block, right? Generating liquidity. You know, would fail to break below, respecting a higher time frame trend line and respecting a higher time frame key level. So, you know, you got three confluences right there. Okay? And these key levels here, so this key level here, right? They've all been back tested from years, okay? Because at the end of the day, key levels, right? It's just historical repetition, price being pushed to a certain supply and demand zone, okay? Because at the end of the day, it's not being pushed to a certain level, it's being pushed to a certain number, okay? To a certain number. That's what they are. That's what investors do. Like, they push price to a certain number, okay? Just a certain number. Right, not to a certain, oh, you know, it's got to respect this Fibonacci level, it's got to respect this trend line. No, it's got to respect. It's got to be pushed to a certain number at the end of the day. Okay. So with that being said, you know, we are respecting our high time frame trend line, and for entries, right. So I wouldn't be surprised if we come below here, see price get pushed to a better demand zone with continued buying pressure, and that would be your high risk buy here at these lows here at probably about 126.50. I'd say 12700. You know, they would be your high risk buys. If we can break and retest here and still respect this high time frame trend line, I can see continued buying pressure up, right? And you got to realize this is a key level of interest. Why? I'll quickly show you. hold on a sec, because we were in this little zone here before we started this corrective bearish structure, right? So if we can break and retest above here, right, that'd be continued buying pressure up, but I'll be very cautious about how we come about at 1.22, right? I'll be very cautious, but I'm liking this bullish structure at the moment. If we can, yeah, like honestly, if we can come up here, you know, generate here, respect this high time frame key level, like break and retest here on the high time frame, I can see buying pressure up. But I'd be very cautious about what's going to happen when we reach this price level here, because we did melt down, you know, like from this price level here, you know, we did melt down. What was that? Like 500 pips, like. We did melt down, okay? So I'm very cautious there. So I'm only looking for buys. I'm only looking for buys at the moment. So that's our analysis on euro dollar. So let's go on the pound against a dollar, okay? So on the pound against a dollar, I did talk about last week, if we retested at this level here, you know, push back up to start the week, come back here and then rally up. Fortunately, that didn't happen. The market just freaking gapped on Monday. It is what it is. And we did push up, and we failed to come below this previous, so this previous high time frame resistance, if you want to call it. So we did fail to break and retest below here, because there's a lot more optimism, a lot more buy side liquidity with the sterling. Okay. So when I'm looking at, I wouldn't be surprised if we kind of, you know, push lower, you know, see price get pushed to a better demand zone. The high risk buys are at 130, probably about like 140 flat. It's your high risk buys, okay? Your very high risk buys. Your safer buys is if we break and retest above 141, because that is a key level of interest. Because I believe, because this is where our so this is where our candle bodies were last time, okay? So hold on a sec. Yeah, this is where our candle bodies were last time. So I just want to see how we react. You know, if we break and retest here above, I can see continued buying pressure, or there could be a lot of sell side liquidities, sell limits, whatever you want to call them, and we can see price get pushed down here, right? That is a possibility at the end of the day, but what I'm more in favor is if we can like push back down, because as we know, Monday there's not much macro data being released. We might see, you know, the pound being pushed down, or we might see consolidate. So if we can wait for a range or an order block to be formed prior to this high impactful data, you know, we could wait for the range and wait for the break, and we could wait for the breakout of this range for continued buys, okay? So I would say your high risk buys are at, you know, 140 flat, or we can see like this previous high time frame order block. If we can stay above 140, 680, respecting our high time frame key level, and this previous order block high, we can, you know, this could be a medium risk buy, but your safer buys if we can break and retest above 1.41700. However, I would be more comfortable with sells if we can break and retest below 140 flat. So if we can break below 140 flat, and I see weakness with this data, and weakness in the US data, I could definitely see selling pressure on the pound, but to be honest, I don't really see that happening with all the positive data that has been released last week. It's a possibility, because anything is possible. But yeah, let's go on to the pound against the yen. So the pound against the yen, we've actually at yearly highs at the moment. But you know, last week after breaking these highs, so after breaking these highs, we actually failed to break below here, right? Yeah, so we did fail to break below, like we did break and retest upon this previous high here. which showed a lot more buy side liquidity. But throughout the week, we were just ranging in this high time frame range. Let's say 153. Like for instance, this is over like a 100 or so pip range. Okay. So that being said, it's very indecisive, very rangy. Like I said, I do want to wait for this data to be released. I don't just want to go in for fucking I just don't want to go in for bias for like no reason. I don't have any fundamental confirms or technical confirms as of yet. So technically, we know the pound against the yen has been overall bullish. We can see this is our new high. If we can maintain above 153 flat, I know that's 100 pips away, but if we can maintain that level here, we're going to see continued buying pressure, right? So with that being said, I wouldn't be surprised if we can kind of, push down here, because we can see here, if we look closely, we can understand that these lows are getting higher, okay? These lows are getting higher, so there's a possibility that we could, push below here to 153.5, 600 or so. And respecting the high time frame key level, we can see price get pushed to a better demand zone. But your high risk buys is if price gets pushed to 153.100, that will be your high risk buys. Your safer buys, if we can break and retest above this lower here, right? That'll be your safer buys at the moment. Your high risk buys, yeah, if we can come below here, see price get pushed to a better demand zone, and then we can continue up, kind of retest this little zone here, and continue up to the next zone, right? Like that'll be like, it's never ever gonna look like that, but that'll be textbook right there. But that's not always gonna happen in the markets. So what I'm looking at is like, yeah, if we can see price get pushed to a better demand zone, respecting a high time frame key level, that is a possibility. If not, if we can break and retest this sort of high time frame order block, I can see continued buys up. Alright, so let's go with USDcad. So CAD has been trending bearish, strong bearish. Why? Because there's a lot more optimism in the Canadian economy. Yes, there's lockdowns and everything like that, but the macro data being released is positive, and we do see a lot of depreciation with the US dollar due to it being a safe haven, and we are in a risk-on sentiment, okay? And we've got to realize the Bank of Canada, they actually said from the previous monetary policy meeting that they were going to hike interest rates as soon as next year, and tapering their bond buying program in the coming months, which shows a lot more optimism, because it's saying that the Canadian government doesn't need much money from the central banks to provide fiscal aid or fiscal assistance, okay? So that being said, I'm really only looking for sells. Like, we've been on a strong bearish run on USDcad, and also to add with USDcad, we can see oil appreciating, and we've got to understand that oil, the Canadian dollar is derived from the price of oil. So when the price of oil appreciates, the Canadian dollar appreciates, okay? You've got to realize, like, a lot of the GDP comes from exporting of oil, okay? It's like the Australian dollar. Australian dollar gets appreciation from exporting of commodities, okay? Like, for instance, gold, silver, copper, iron ore, coal, they're both commodity currencies. So, that being said, because what we've been seeing here with USDcad a lot lately, we've seen a lot of accumulation and distribution, right? So, like, for instance here, we range, let me go on the 4 hour, actually look a bit easier, sorry. So yeah, so what we see here on USDcad, we range and we push, right? We range and we push. It's been pretty easy, like, it's been pretty easy trading USDcad, because all you gotta do is just wait for the breakout. But we do see it, trading down in this range here, okay? So that being said, with all this being said, I'm not really looking for any buys on USDCAD. Your high risk sells here is if we can see price get pushed to a better supply zone, push up here, generate, if we can generate a bit of liquidity in this area here, then if we can push down further, break below, that is definitely a possibility. It's not going to look like that. That is actually a terrible drawing. I'm not going to lie. It's a terrible drawing. So if we can generate a bit of liquidity in this area here, you could be a lot safer and wait for the break below here, break below this high time frame key level. Or you could take the high risk and take the impulsive entry and take the sells at 121.550. That is definitely a possibility. But I probably want to see how the price of oil is, and with weekly, and then with the crude oil stocks change, I will want to see, because that's going to impact the price of oil, and it's going to impact the price of the Canadian dollar. Okay, so along with with Canada, we do have that CPI data being released throughout this week, along with like housing price index data. So if we see positive data with those releases, we can see continued appreciation with USDCAD. So looking at is high risk sales at 121.550, safer sales at 120.600. So that's what I'm looking for on USDCAD. So gold. All right, so gold, we have been trending bullish after hitting these lows here at 1680. We were respecting this high time frame bullish channel. We did generate a bit of consolidation, a bit of liquidity in this area here. Once we broke and retested this level here, it was a very clean buy to the upside. And now what are we doing? We are generating a high time frame consolidation zone. So what am I looking for? So your safer buys is if we can break and retest above 1840. I think it's 1845. Yeah, so probably about 1844. If we can break and retest above here, get some nice candle body closures, I can see continued buying pressure. Okay, of course with the appreciation in the US dollar. So that's what I'm looking for in gold. Yeah, possibly if we can, because I don't, just the way gold is operating at the moment, I don't see it like getting pushed below here, right? Like, I just don't see just gold just like trending downwards and going boom, to the next key level. I just don't see that happening. Like we got this little, like if we can if we can respect this high time frame trend line, that's a possibility, and that would lead to a bias of continued buying pressure with gold. But it's not always going to pan out like that, right? Because gold can whipsaw you because it wants to. Okay, so that being said, I would like to see gold get pushed, probably to this like little demand zone here, right, which matches up with these weak lows. That'll be ideal. That'll be like a very high risk entry. Your safer entries is if we can break and retest here, right, generate some liquidity, fail to get candle body closures below 1840, we'll see continued buying pressure up, right? This way gold's up. Like when gold trends, from my past experience, when there's looking at the gold chart and trading gold, when gold trends, what you'll see a lot of the time is something like this, right? So you'll see something like this. So we see like push to the upside, for example, and then we generate liquidity, generate accumulation, then push, generate accumulation, then push. Like they're like, when gold trends like that, they're your easiest entries. So what's the easiest entry? Okay, you wait for the breakout of this little range here. So like I said, there's a reason why it ended the week at these weekly highs. Okay, there's a reason why. Okay, what I'm more in favor for is if we push down, because I don't think it's going to start the week and just pump up. It could, we could see a market gap to start the week, see price get pushed up. But if that happens, you know what I'm looking for? I'm looking for a retest at 1844. So if that happens, it is what it is. I've missed it on that move, that's fine. I'll wait for another day, I'll wait for the right fundamental and technical confirms, and wait for price to get pushed to my more, in my opinion, favorable demand zone. High risk buy here, or we can wait for the break and retest here on a high time frame key level, candle body closures, right fundamental confirms, continue buying pressure. Always and always. So, like, honestly, like as we can see here, right? As we can see here, you know, now we're turning up accumulation, push up, accumulation, push up, accumulation. Then we're in this little tight range here. And we get the impulsive move to the upside, accumulation, impulsive move to the upside, accumulation. Now we're in this little range, and now we're waiting for the next move. So that's all in the past. Like, it's easy to see stuff in the past. But what I'm looking for is what's going to happen in the future. Okay. So, like I said, if market gaps up, you know, 120, 100, 150 pips, whatever it wants to do, let it do it. Like, let it do its thing. Like, I'd be more favorable for if we can push below, if we can respect this high time frame key level 1844 and see continue buying pressure. Okay, that's what I'm looking for at the moment. So that is gold. Now let's go to the US dollar. So we can see the US dollar after hitting these are 6 yearly lows, right? 89, what is it? 89,300. They're like 6 yearly lows, right? And that happened at the start of the year. So when we hit these 6 yearly lows, the dollar just fucking bounced, right? And then we came to these lows here. For you Fib experts, yeah, that's some Fibonacci level, probably like, I don't know, like 70%. Let me have a look. From this high here. Fuck, 70, like, I don't know, it's like 78 point something. Pretty spot on if you ask me. But yeah, so after hitting these lows, we failed to, you know, create a high time frame double bottom. And we did start to rally upwards, right? But now we're in this corrective bearish structure, okay? So what I'm looking at, I want to see how we react at this level here, okay? 89,800. I want to see how we react, right? I would not be surprised to start the week. We see the US dollar get pushed up to this preferred supply zone, right? Generate a bit of liquidity, accumulate, then push down, right? And break and retest, and push down. But I'm very cautious. About when we come to this level here. Just want to see, because we might see an aggressive bounce back, okay? And these are historical key levels from, like, you know, a year ago, 2 years ago, 5 years ago, even like 8 years ago. Like, these are just historical key levels, like all the way down here, right? But hold on a sec. Yeah, so I just want to see how we react. I wouldn't be surprised if we just generate a bit of a accumulation, right? We see like a high time frame order block being formed here, and then especially if we, like, honestly, if we like fail to, you know, especially if we fail to break, you know, this zone here, 90.700. We say below here, right? Say for sales, if we can break and retest, get some nice candle body closures here at 91.20, we can see continued selling pressure on the dollar, okay? Which is going to aid with our bias on the Aussie, Euro, Pound, and shorts on USDcad. And GJ moves are similar to the Pound against the dollar, so same with EJ, same with Aussie against yen. They all move similar. Why? Because there's a rich currency, it's a safe haven. That's another story. So yeah, so that being said, yeah, what I'm looking out for is if we can, yeah, like if we can see price get pushed better up, generate a bit of buy side liquidity for it to accumulate, push further down. It's just that if we can, like, break above here, you know, I can, yeah, that would lead to a lot more shorts on our risk currencies. But with what data we do have been released this week and the current optimism in the economies, yeah, I just don't see that happening anytime soon. Well, I don't see that happening this week with the data that's been released. So that being said, like I said, I'm looking for it to accumulate this area here, break and retest below here, and then we can see our freaking risk assets like fly up. We can see the Dow Jones reach all-time highs again. You know, we can see the S&P and Nasdaq reach yearly highs again. We can definitely see that happen. Okay. Or we could definitely see something like this, because I'm not gonna deny it. You know, like it's and if you have a look at it, a high time frame key level, not key level, high time frame trend line. Okay, respecting. Ooh, respecting. And what does that line up with at the moment? If this high time frame trend line actually does work, and it is actually lined up, we can we could possibly see price get pushed up to this supply zone here for it to only be pushed lower, because investors want to get in at a better price, and they will push price to a certain number because they have the power and the money, because they can. So there's a possibility, right? So this happens, I won't be surprised if we push back up. But then if we see a sell-off on the US dollar with plenty of optimism in the major economies, I can see a lot more buying pressure with our risk currencies and continued risk on sentiment. Alright, so that's my weekly analysis done. I'll be uploading this video prior to the market open, so be sure you watch this video. I know this video can be a bit long, so just watch this video when you got the time. Just watch this video when you have the time, and just make sure you note about our key levels of interest, and hopefully you'll have a great trading week.